Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Friday, and I'm going to say it again. And a new all-time record high in gold. Gold right now up $34. I'll say it. Listen, if you want to pay more, keep waiting. That's as simple as I'm going to put it. All kinds of projections now. All the banks revising their gold forecast. Now we got take Bank of America. Forget about it. $2,400 gold, and gold doesn't care about rate cuts. Right? They don't care at all. Hey, $3,000 gold. Most of them, as we said for the last few days, $2,500 by August. We may have $2,400 by next week. As this thing continues to play out. There's so many things to talk about today, from the expansion of war, the CIA saying Iran is going to strike Israel or strike back at Israel, whether it's inside of Israel or not. We'll see in the next 48 hours. You got that out there. A bunch of people following Bank of America's lead about U.S. debt. Now warning, is the U.S. getting ready for another downgrade because of the upcoming Social Security, Medicare, Medicaid problem? And we've been talking about debt markets. Now they're saying, hey, get ready for the 10-year note to be at 4.5%. As we know, gold has been on the tear as the 10-year note continues to tick upwards, and then a blowout jobs number. I mean, put it this way, every single illegal alien entering the country is getting hired. A blowout number. Well, we've got all of that and so much more. Our toll-free number, 800-951-0592. The website at allamericangold.com. And Jason, silver trading towards $27.50 right now. But the big story, what gold is doing, and a lot of talk about how the Western banks have lost control, and this is being driven by the East. This is being driven by China. This is being driven by India. This has been really all the, I guess I'll call them the small European, EU countries that continue to pile into gold, Poland and the Czech Republic and others, all now starting to buy gold as well. And some analysts are just saying they're outright dropping dollars and just buying gold right now.
Buyer, gold customers, you probably should. Am I on? Do you hear me?
Yeah, you're on.
Okay. Joe gave me the weird look, like I thought I wasn't broadcasting. If you're one of our bigger customers, I'm going to highly suggest you buy today and buy as quickly as possible. In the last 6 weeks, if you have 50 ounces of gold, your gold position's up $15,000. If you're closing out some account or you've inherited some money and you've been thinking about gold and you're one of those guys like, well, it will come back at some point, timing this thing may be the wrong thing to do, because 2,600 gold sounds ridiculous in the next few weeks, but there's guys talking about, Joe was telling me, there's guys talking about 2,600 gold. That means another $300. That means 50 ounces of gold will go up another $15,000 in that position. I would highly suggest that you get into this thing quickly. Now, it's going to keep going up. The crazy stuff that Joe and I talk about year after year, month after month, day after day, is going to continue to happen. But Joe, it's hard to even say, because gold usually moves slower. But in 6 weeks, your 50 ounces of gold has gone up $15,000. And unfortunately, the fortunate thing is I'm glad if you have it. The unfortunate part is it's a shadow. It's a big, dark shadow of things. And this shadow is going to be a big one, Joe. The stuff that's getting ready to happen is tremendously detrimental to society. It's why we buy and why we sell gold, Joe.
Yeah, and, there will be corrections at some point, but this is kind of, again, when It's been undervalued. Everybody kind of agrees on that. The banks, and let's put the name on it, right? J.P. Morgan's done a good job of price control, but it really has been multiple years in the making. And this is the part I think a lot of people forget about, as the central banks were buying just ridiculous amounts of gold, 1,100 metric tons of gold a year for 2 years in a row, silver being gobbled up. All the supply just disappeared. So you're now having really low inventory. With a move that we've seen, you should see central banks stop buying because, the prices are high. They'll stop. Nope, they haven't. They're not. It doesn't look like they're going to. And it's easy to see now all of a sudden, wait a minute, economics 101 comes into play, which is simple supply and demand. They're going to have to get the gold price high enough to stop the demand. How high is that going to be? We don't know, right? That's kind of the thing that's unknown. What we do know is it's going to get back into balance here at some point, but it looks like, you got to remember, a lot of it's computer-driven, chart-driven, this driven, that driven. $3,000 gold in 2024 seemed a little outrageous 6 weeks ago. Almost seems like, is that all it's going to be? Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Joe and Jason wrapping up the week. The year of chaos. A huge reversal in the Dow yesterday. Sent it down another 500 points. It's been down 4 days in a row. The Dow below 39,000 right now in the 38th. Now, right now it's up 200. I don't know if that's where it's going to end the day. Are we going back to, well, you got to wait for the last hour of trading to see what happens with the market. We've been telling you, get diversified here. The S&P below 5,200, but up 40 right now. The NASDAQ's up 150. The 10-year note with that blowout jobs number back right near 4.4%. And like I said, everything else is yielding higher than that. But hopefully we'll get to it today. A major story breaking now about the United States potentially having a credit crisis in 2025 into 2026 with Social Security, Medicare, and Medicaid. And I think, this hope for lower yields, we'll see. Obviously, war drums are beating. The CIA last night saying within 48 hours they expect Iran to pay back the attack that Israel made on their consulate in Syria. Right now, crude oil up another 70 cents here, $87.30. Obviously, unleaded gas is higher, right? Diesel's higher, all of that stuff. By the way, Brent, almost $92. Silver, gold's up 35, 23, 24 on gold right now. Silver's up 25 cents, just a couple of pennies here below $27.50. And like I said, guys, you're not preparing for today, right? You're preparing for what's coming. What is it going to look like in 6 months, in 12 months, in 18 months? And when you start hearing stories about credit problems, downgrades, the CBO, which you can't trust. I told you, never trust the CBO because they only can do, right, they're hamstrung. And then Bank of America took the CBO report and said, hey, guys, interest payments are going to be $1.6 trillion by the end of the year and probably $2 trillion going into 2025. But now it just causes everyone to take deeper dives here. And talking about a major credit event in the US Treasury markets, this is why we keep telling you, be diversified here, get smart here. You've had some good gains in your stock portfolios over the last, 5 years. Well, really over the last, 6 months, right? Because the Biden administration, the Dow was like 32,000 for the first 2 years. But right, all of a sudden you got some good gains here. Call our friends at Y Refi. Lock in, get 10.25% fixed rates of return, not correlated to Wall Street, not correlated to the Fed. If you've got $50,000 or more, check them out. InvestYRefi.com. You guys got those IRAs out there. You can use those as well. You can use those IRAs to get gold and silver. You can do both. But call them, 888-YREFI24. So we know about the war drums. I don't know. Is it going to happen? Probably. Right? We've been saying it looks like they want this war to expand. I mean, it's pretty much now in Lebanon. It's pretty much now in Syria. And everybody's waiting to see what the Iranians are going to do next. We kind of given up on the Red Sea. I guess we just given up. The Houthis win over there in the shipping channels. But then the jobs number today comes out. And again, I don't know. This whole talk of rate cuts, I think, is nonsense. But what do I know? I don't know. 303,000. So about that many illegals come across the border every month. That makes sense. Hey, they all got jobs. 303,000, a blowout number, the highest since January of last year. I mean, I don't know. Just incredible. The unemployment rate ticked down to 3.8. So remember last month we had a good number, but the unemployment rate shot up to 3.9, back down to 3.8. February was revised a little lower to 270. January was revised a little higher to 250. But Jason, this is well above what anybody was expecting. And I was looking for the wages in this, and I just didn't quite see. Yeah, average hourly earnings was up 0.3%, which is the highest this year as well. So kind of like the ADP number, wage inflation still going. And, when you look at it, year over year, it's down, 4.1. It was, 4.3, because remember, we had some big wage numbers, but kind of like the inflation data. Wages now are starting to get hotter again. Energy prices are getting hotter again. This is, again, I don't know. I think if we get rate cuts, it's because they're going to be forced to get, which I think they will. Before the end of the year, they're probably going to have to cut rates because they're going to be forced to because of other issues. But right now, Jason, this number says you should be raising rates.
Yeah, the jobs numbers, as you say, the illegal immigrants, bringing in so many low-wage workers in the fashion that's been happening is going to be. Joe's been talking about it much more, and he's on it more than I am about how damaging this is going to be. This is going to be tremendously damaging. And you're looking at these jobs numbers, and I was watching some stuff, and it's all these hires that have been happening over the last year when it should be you hear companies firing. Well, they're hiring these people coming through. This is going to be, at some point, they're going to have all they need. I mean, and we got some indications. Here in Denver, we did a story on Half Empty Cup of Joe where a politician here in Denver wants to get them out of here. He basically said, we're full up. Well, what does that mean? Okay, so we got all the ones we need here. Let's get them to the next market that needs more cheap labor. So to Joe, it looks like the tanks are getting full on these low-wage workers. And then what, right? the continually firing of employees. I mean, I've been involved with Patriot since 2018, and when gold hits these highs in 2020 and 2021 and 2022, we get a tremendous amount. I mean, just a massive amount of buyers. And here we are blowing past all-time highs. We got customers that it hasn't quite blown up yet. It's going to happen. It's going to happen. People are kind of, I think, waiting. Some of the more sophisticated buyers think there's going to be some pullback, and they haven't seen this before. It's not a time to stop. And I've been looking at cryptos a lot more closely. I've been kind of telling Joe a little bit. I've been looking at it, and I'm wanting to learn more about it more than really buy into it. And I'm going to be done researching here in the next weeks or months. And I'm telling you right now, Joe, you haven't heard this from any of the prognosticators, but I feel very strongly that the ETFs in Bitcoin, which started in January, has a little bit to do with gold shooting off. I haven't looked at enough information. I haven't heard anyone say this, but when you have price controls in paper gold and paper silver, and now suddenly you have to try to control something that's explosive like Bitcoin, which the ETFs have gone completely out of this world, just blown up. Joe, I think it gives them a little less control over their gold and silver ETFs. And maybe part of what we're seeing here is they're trying to control one asset they don't like in Bitcoin, and they're testing their controls. The way Bitcoin is moving, they're showing that they're trying to paper control Bitcoin. But maybe there's just not enough of this fake money to go around to keep gold down, Joe. Maybe that's what we're seeing. That very likely, I think that we'll see this happen again in a few months, where Bitcoin goes up again, it sells off, and then gold shoots like a rocket ship. So this $300 of gold in 6 weeks, we may see another $300, $400, $500 gold going up a little later this year again. And this is what happens when markets are unhealthy, Joe, and you want to put your money in fake assets.
Yeah, and then we are 300, it's 325, right? Already, right? I mean, next week, don't be surprised if we say 400.
400,
right?
yeah.
I mean, this is just what it's looking like. Gold's up 37 now, 23, 26. 99-cent store only. 99-cent only stores. There's 371 of them in California, Texas, Arizona, and Nevada, liquidating, saying that they no longer can survive the retail landscape. And, of course, obviously, right, does anything cost 99 cents anymore? I don't think, right? I think that's kind of what they're saying, right? Hey, nothing costs 99 cents anymore. And it's just, man, so many different things that leave you scratching your head. But this is, for me, what I'm worrying about the most when we're really talking about what's happening here, and I think it's a much bigger picture than what they're trying to let us know about, and it really has to do with the debt that's coming. Very, very quietly here, we're starting to see huge debt growth, mostly because rates continue to be higher than what they're hoping for. You had Neil Kashkari out saying that maybe that we're not going to cut rates at all. He made those comments yesterday. We talked about the Congressional Budget Office and their warnings, but now Bloomberg Economics ran 1 million simulations to assess the fragility of the U.S. debt market. 88% of the simulations showed that the debt-to-GDP ratio is on an unsustainable path and defined as a major increase in the overall debt of the United States. So that's shot. First of all, I wonder what the other 12 said, right? I mean, what is? But again, right? Hey, everything goes back to normal. Inflation goes away. Who knows what you could have? But think about it. Overwhelming. They're telling you they're going to have problems. And now they're saying that even Janet Yellen, look at this lady. She's in China right now. She's trying to tell the Chinese how to do their business, right? Right? That's so
funny. Buying gold. Stop buying gold.
Right, stop it. And stop making so many solar panels, right? Yeah.
Quit sending us these treasuries back.
She finally admitted that they do need to reduce deficits to stay on a sustainable path. How do you reduce it? I mean, inflation, no matter what it is, is it 3%, 6%, 8%, right, on top of the amount of cutting you're going to have to do. But they say that sustainable reductions would have to continue to hold the levels of at least the interest expense. Essentially, let me tell you why 88% of them say it's not worth. That's almost impossible. I mean, would we be willing to cut military spending in half? Would we be willing to cut Social Security payments in half or Medicare and Medicaid in half? I mean, because that's the type of numbers that you're talking about. But now they're talking about the credit rating agencies are starting to get panicked about what I've been warning you about. Before Social Security goes broke, Medicare and Medicaid go first. 800-951-0592. Joe and Jason, Patriot Radio News Hour, wrapping up another week of records. 2,400. What's so funny is we talked yesterday, $2,500 by August, and now we're saying, are we going to have $2,400 next week? I don't know. We'll see. It sure looks
it's
like
moving. It's
right?
just moving.
Just incredible here. But think about what Bloomberg is talking about. 1 million simulations and 880,000 of them. They didn't say, hey, okay, well, they're going to, the debt's going to go up. We know that. All million of the simulations, the debt went up. No, they're saying that 88% of them say that a crisis, a disorderly rout in the Treasury market. We've never seen that. At least, I don't know. I wasn't around during the Great Depression and all that stuff. We really didn't have a lot of debt then to begin with. But a disorderly rout in treasuries triggered by a sovereign U.S. credit rating downgrades, and probably both, a panic over the depletion of the Medicare or Social Security trust funds to force action. They're simply playing with fire. I would say in the last week, at least half a dozen, maybe more, analysts that their job is the Treasury markets are now talking about we're going to have some event in the Treasury markets, and everyone was talking, before 2030, but now it's incredible how many people, Jason, just in the last week are talking about 2025. Right, and I start putting the things together. The CBO comes out with this warning saying, hey, the interest payments go up $100 billion every 100 days. Then Bank of America is like, listen, throw that crap away. Right? Interest expense is going to be $1.6 trillion at the end of this year. How? I mean, we just hit 1.1. Right? I mean, we just hit 1.1 trillion in interest expense. It's April. And they're saying 1.6. But it's what they're saying about next year and how bad it gets next year. I've been warning about Medicare and Medicaid. It's like nobody listens. Because they don't want to tell you What they want to say, well, we'll keep showing you the Social Security number, right? Which is what, 2033, 2032, 2026 for Medicare and Medicaid. And what do they do? What will they do? They'll probably just divert Social Security money to Medicare and Medicaid. It's not like there's really any money. That's kind of the problem, right? All that happens is there's just going to be a massive explosion in debt because there is no trust fund. You know, they say it's got, whatever, $2.5 trillion. No, it doesn't. No, it doesn't. They spent it. They spent it. All that means is all that money just gets added onto the debt. And I think, Jason, a lot of these things is what I see playing out here. When big institutional money, when countries, central banks start fleeing the dollar, they're doing it well ahead of time, right? They know. Right? And it just seems like all of a sudden the time clock, I thought we'd have more time. I don't think we do because I think these interest payments and the amount of debt that has to roll over, people forget. Janet Yellen, that evil, evil woman, when interest rates were zero, you know what she was doing? She was selling short-dated notes. 1 year and 2 year notes, not loading up on 10, 20, and 30 years. Why? Well, because she wanted the rates to be super low so housing inflation would be created. Right? Remember, you get a mortgage for like 3%, that was all her. Now all of this debt, an avalanche of debt, has to be refinanced, Jason, over the next 2 years, on top of we don't have any money already.
Well, she seemed like maybe she knew she shouldn't get into long-term debt with the low interest rates because that would be damaging for her in the future, right? I mean, you don't want to load up on 30 years at 0%, and you end up like these commercial banks or these commercial banks and these commercial loans. So, and what is she supposed to do, right, Joe? But it seems like she had the knowledge to make a better play. That's what it sounds like. And gold moving like this, I've been saying it a while. Gold is a leading indicator of inflation. What kind of inflation are we looking at, Joe, if gold's going to move like this? And what if it moves like this again, like I think it's going to do again, wherever it stops, 2,400, 2,500, 2,600, wherever this thing stops, at some point it'll slow down. And then I'm telling you, a little later in the year, you will see this spike again. And what does that mean for inflation? What are we going to be paying for? If you go to McDonald's, what are you going to be paying for a Big Mac, right? What are you going to be paying for a pound of potatoes? What's copper? What's lumber going to cost if you have to do a home improvement project? What is all this stuff going to cost in just the next 3 to 6 months? Never mind next year and 5 years from now, Joe.
Yeah. And why are we not getting this from the Fed or the government? Well, because all of their little deals, 2% GDP growth and 2% inflation. Right? That's how there's like, oh, no, don't worry, it's going to be fine. I mean, completely unrealistic numbers. But this is what I think is happening. I think this is why so many people are flocking to gold. And then during Jay Powell's testimony, so go back, what was that, a few weeks ago, maybe a month ago, he had his semi-annual testimony in front of Congress. He was asked about foreign gold holdings being held by the New York Federal Reserve. Jay Powell refused to answer the question because the question was, how much foreign gold holdings are left? How many countries have called up and taken their gold back and you're just not telling us? And Jay Powell refused to answer the question. So a group, Headline USA, filed the Freedom of Information Act, asking the Fed to release how much gold the Federal Reserve Bank of New York currently holds in its vault and who owns it. Well, guess what? The Fed gave an answer. We're not the government. We don't have to reply to Freedom of Information requests. It's none of your business. Well, can understand why they don't want to answer it. I've got a funny feeling there's a whole lot less gold there now than there's ever been. Patriot Radio News Hour. Jason and I will be right back. 800-951-0592. Gold's up 40, 23.28. Silver up 75 cents. Or I'm sorry, 28 cents, 75 cents. 28 cents, 27.52. So here's what we've got today. Like I said, just things are going to get a little more pricey here. $20 gold pieces. Any amount at $25.25. So $2,525 on $20 gold pieces. $5 liberties. We've hit a little vein for whatever reason of $5 liberties, but again, as price moves, they move with it. 1 through 19, $660. If you want to buy 50 or more, $650 at 800-951-0592. By the way, 1/10 ounce American gold is to make this announcement. We open Monday at this price, Monday. They're going to be $295. So right now, they're at $285 on a 10th ounce gold eagle. Jason, we've been talking about $2,400 gold next week. At $2,400 gold, those won't be below $300 anymore. Just won't be. And silver right now, silver eagles, $710. Rolls of halves, $235. Rolls of quarters. Wow, I got to change the quarter price. Apparently, I got quarters on sale at $2,225. $225 on quarters. $112.50 on rolls of dimes. And Jason, again, you can kind of see what's happening here, right? We told you the Fed was out of choices. There was no good choice. Fight inflation, kill the economy, don't fight inflation, and the debt spirals out of control. And now Moody's saying they've run 1 million simulations. The chance for a major event in the US Treasury markets, 88% likelihood. And Jason, now it's just a matter of what's the time frame. Is it 2025? Is it 2026? It's coming, and coming pretty quickly. We've been telling you all week, get it put away. What are you waiting? What more signs do you need to see? 800-951-0592. That's our toll-free number. And whatever it is, there's no amount too small, right? If it's just a roll of dimes, get the roll of dimes. Hey, if you can buy 50 20s, buy 50 20s, right, Jason?
Yeah, and if you're one of those snake-bitten older buyers that bought back in 2011, when gold got overbought and then it came back the next couple of years, that's not what this is. We'll try to be as honest as we can as we see it. Yeah. That's not what this is. It could turn. You never know when it gets overbought, but that's not what this is. This has been underbought for so long, and with the way things are moving and with the inflation, all you have to really do is go look at a 100-year gold chart you just go on the internet and click onto it, and look at the price action of gold in the 70s and early 80s. That's your blueprint, not 2011. That is not your blueprint. Your blueprint is 70s and 80s,
not
right,
the
Joe?
Blueprint. That's not the blueprint, right? I think, Jason, that's a great point. Gold went from $35 to $800.
Yep.
That's what it did. We're reliving this, but here's the difference now. See, what was different in the 70s, we didn't have a lot of debt. I mean, it's 1971, the debt was $400 billion. And over half of that was left over from World War II. Right now we're talking about what? 35 trillion plus 7 that the Fed's got, plus, oh, by the way, we're going to be at 37 trillion by the end of the year. Man, that's the third show in a row I've had to sneeze during the show. It's so weird. But, right, and B of A, they're saying the debt's going to be, what did they say? Did they say $40 trillion next year? $40 trillion. That means we're going to have, actually. Right, we're adding $5 trillion in what? 15 to 18 months? I mean, that's so unsustainable.
It's been folding over, doubling almost every 8 years anyways, ever since the George Bush Jr. took over, Joe. So if what is it, 30 whatever that Biden came into, 20-something?
It's going
to be 50-something.
Yeah.
Yep.
So right now, to roll over every 8 years at $35 trillion, well, we got to run deficits of $4.375 trillion. I mean, so I guess Bank of America is just saying, hey, listen, it's just math, right? Just math. And it's not complicated math, is it?
It doesn't feel like math when you have to buy a meal for $150 in the near future. It's not going to feel like math then, is it? It's going to feel a lot worse than math. Yeah, it's math for people that are holding enough gold, for people that are holding assets that will go up with inflation. But it's a whole lot more than math. If you haven't gotten into gold and silver, if you haven't put a position in and you haven't started saving, here's the first thing. If you're not saving, you're watching the show and you're not saving money, you're not putting stuff away, that's your number one goal. Start saving. Number two, if you've saved some and it's cash, you put it in gold and silver. And if you start saving now, put it in this. And yeah, it sucks to start one roll of dimes at a time or maybe one gold piece at a time. But that thing, just like our debt, doubling over and going downhill like a snowball, your savings can do the same thing. Once you get in the habit of it, you'd be amazed how quickly you can put yourself in a better position. The customers that come and see me and buy the gold and silver are the most relaxed and comfortable people I've ever met, Joe. They just have done this the right way, and they don't have to worry like everybody else when the world's seemingly blowing up in front of them, Joe.
800-951-0592. Jason and I wrapping up the week. Final segment coming up. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up the week here. Going to be another record high gold close. We just blew right past 2,300. 23.27, 23.28 right now on gold. Silver, $27.50. I just got an email. I've got a couple of bags of $50 available, so rolls of $50. So I'm going to take $10 off, $2.25 a roll of half. So now today you can buy $50 for the same price as dimes or quarters. $50 rolls, $225. $20 liberties. Right, here's the new price, $25.60. I mean, that's the regular price. Save $35. Any amount at $2,525. I mean, if we had $2,400 next week, boy, buying 20 at $25.25 is an absolute steal. And whether we do it next week, a couple of weeks, the summer, it's coming. And all of a sudden, the ridiculous, hey, $3,000 gold sounds ridiculous 6-7 weeks ago. It's amazing how many people are hoping it's only $3,000, right? Only $3,000 before the end of this year. And then, of course, the $5 liberties, 1 through 19, 660, 20 or more, 650 at 800-951-0592 as again, the move in gold, it's just catching up to the realities, right? You know, first it was COVID's fault, right? Don't blame it. It's just COVID. It's a transitory situation. Yeah. And then, inflation's bad, but it's going to come back down and they're going to get a hold of it and soft landings. And all of a sudden, we're in the cycle, right? The 70s cycle seems to be here again. And how many years have I been telling you how weak Jay Powell is? All they want to say is data this, data that. That's not they're supposed to be out there telling us, when are we going to get to 2%? You should tell me. When? When is it? Oh, no, we're watching data. That's all they do is watch data. Joe Biden doesn't even know what day of the week it is. Get it put away here, because why is it going so fast? Well, because it was underpriced for what? Probably the last 5 years. It's been underpriced, and now it's Jason, it's just simply going to price itself right, whether the markets like it or not.
In 2019, there was a moment before COVID that every country in the world had record high gold except for this one. Coming into 2024, every country in the world had record high gold except for this one. And so when Joe says catch up, that's exactly what it's doing. If gold holds this price on Monday or goes up like a couple of bucks, we'll have 2,400 gold next week. If there's a pullback on Monday, we're going to hold this price, I believe, but because it'll go up the rest of the week. It's going to have upward. It's just got a tremendous amount of upward pressure, Joe. So, yeah, if gold holds this price, which it sure looks like it's repeating what it's been doing every week the last month and a half, then we have 2,400 gold next week. And then what are we going to have to talk about next week? It seems like every week we're having to talk about what would normally be months worth of gold work, right, in 1 week.
Yeah, in a week, right? Yeah, right. A month's worth in a week. 800-951-0592. Put away what you can put away. I'll get all these prices up on the website as well at allamericangold.com. Jason and I, though, we're going to come right back. We're going to wrap up the week on the final half-empty cup.